All right, welcome everybody to another Forex Bootcamp training. I do this every Saturday around 12 o'clock to 12:30, and then I post it up on my YouTube channel thereafter. So if you're watching live, welcome. If you're watching the recording, welcome. If you are watching the recording, place a comment below and just put R. That way I know you watched the recording. Or leave a comment or thumbs up. Let me know that you enjoy the content that I share on YouTube. And also share it with your friends. I try to keep it simple, not too complicated. That way you guys could actually trade the Forex market with confidence. And I also do one-on-one training. So if you ever want me to do a one-on-one training with you just to get you started, I do that via Zoom calls. That way we could, I can answer your questions, get you set up, and so on and so forth. So definitely leave a comment if that's something you want to do. But right now we're looking at a chart. I'm going to mark up the chart and teach you exactly how I mark up the chart and maybe give you some pointers, some ideas, some strategies to help you mark up your chart. And again, to get to your chart, you want to get to Trading View, right? You want to get Trading View. It's available on my website at metrofxtraders.com. Click on Trading View, create a free account, and start marking up your charts. This is the majority of the time I spend on the charts to identify areas of interest where I enter the market and I exit the market. Okay. So basically, I do a top down analysis. I take a look to see what's going on in the market from a higher time frame. So we have time frames up here. Okay. All the way up to 4 hour. But I normally start with the 1 month time frame just to get a general idea per month what the market's doing. Okay. So looking at GBP USD, I noticed that there's a couple of things that's going on here. Right here was a consolidation area where it really didn't go up or down. It really didn't give you a trend right here, right? So if I was to box that up, and this is something you might want to do for yourself as well, is mark up these areas to see, okay, what happened here? Nothing really happened. It just went sideways, right? It went sideways there. Then it eventually came out with that sideways pattern, right? And we call this a breakout. So you mark up where the breakout happened, right? Usually at the bottom of the candle over here. Make this bigger so you guys can see that. And all you're doing is looking at historical data right now. You just look at the data to see what's going on, okay? Because usually when there's a breakout, there's got to be a pullback back into the breakout area before you can take a trade. There's usually going to be a pullback to that area. That means it's got to come back and touch that area before it continues its journey. Okay. So as you can see, it did do a breakout, but what did it do? It didn't go higher or lower. It didn't make any higher highs or any higher lows. So we have another sideways movement. So we're going to put another box at the low here and put it all the way up here. Okay. So that's also consolidation area. This consolidation area is basically letting you know that there's no trades really in the monthly time frame. Okay. You want to wait for a breakout. There's another breakout here, but as you can see, we're back into the consolidated area. Okay. Now, to find opportunities, you have to go down to the lower time frames. But this whole area here is pretty much consolidation area. So to go down to lower time frames, you have to determine, okay, what direction the market's going to. So if we were to say, if we were to ask that question, answer that question and say, okay, is this a upward trend or a downward trend? So we take it, go from the top down, we put our trend line like right here, which is letting us know that, okay, it didn't make any higher highs. It didn't go above this line, but it did make lower lows. Because each time it broke out of the box, it was lower. It was lower. So you could say it's actually going down, right? It's like a downward trend. Okay. Now, since we know this, we're going to be looking for sells. Okay. We're not going to buy the market for it to go up. We're going to look for an opportunity to, know, put a sell order in to see if the market's going to go lower than this low. So we put a horizontal line below this low right here. We want to get in the market and look for a lower low, something that will break this area to continue its journey lower. Okay. So yeah, that's where the bottom is. Now we go down to the weekly and we try to identify the same pattern. Okay. Yes. It's still going lower low, right? Everything's low below this trend line. Okay. So we're anticipating it to hit the trend line and to bounce off the trend line and go lower. So if we were to use this tool here, we can say, okay, it'll hit the trend line, hopefully don't go above it, and go back down to break this low here, make a lower low. Okay. And then go do one of these numbers like that to continue its journey. It's just a prediction. Are we going to be right? We don't know because we're not the one that's, triggering the market. We're retail traders. So we're not going to be doing it. We can't really move the market. The people who really move the market are the big banks, okay, and the institutions. They're the ones who actually move the market higher or lower. So we just try to follow in their footsteps, try to capture, you know, hang on to their coattails to see if we can capture some profit along the journey. All right, so that's one thing to look at. So we can take that off. Now, weekly, then we go down to the daily. Okay, now we can make this trend line a little stronger here. All right, and we can look at the daily and see that, okay, there's a lot of movement, larger movements going on in the daily. Let me open it up here. Okay, what can we identify? We can identify a couple of things here. Over here, we see inverted head and shoulders. Okay, basically inverted head and shoulders. It starts at the bottom and then trends higher. But then we see, let me mark that up for you so you can see what an inverted head and shoulders look like. So inverted head and shoulders looks like this. Cool. Here, you got your left shoulder, your neck, and you got another right shoulder there. Okay, so you got your left shoulder, your neck, and your right shoulder. Then it comes back down and touches the right shoulder, and then it climbs up. That's an inverted head and shoulders. Then it made a regular head and shoulders over here. Start right here. Left shoulder, neck or the head. And that's another inverted. That's another head and shoulders pattern. This inverted, this is a regular head and shoulders. Okay. Usually when you see an inverted head and shoulders, it goes up. Direction will be up. A regular head and shoulders, the direction is down. Okay. So if we're below this line here, we know that we're looking for sells. So this head and shoulders makes sense. Okay. But what did it do? If you look over here, it came back pretty much along this line here. It didn't go higher than the head. Pretty much came back to this area and bounced off. Now it's going down below the trend line that we put on here. So we're in a downtrend. We're not anticipating to take any buys unless it breaks this trend line right here. Okay. Now, so if we're looking for buys, we're going to go to lower time frames. Okay. So we're going to go down to the 4 hour now. Okay, and it's still trending lower, as you can see. Trending lower. And that's how you do your top-down analysis. That way you can see exactly what the market's doing. So what is the market showing us here? The market showing us that head and shoulders pattern again, right? A head and shoulders pattern is right here. Get your left shoulder, get your head, and you got your right shoulder. That's your another head and shoulders pattern. Okay? So if history can repeat itself, all we need to do is wait for the pattern to come back and touch the red shoulder again. So for it to retest the pattern, we needed to do these numbers. It's not going to go straight up. It's going to go basically either at this line, okay, bounce off that line and continue its journey down. Okay. And that's how it'll probably create another head and shoulders on its way down. Okay. And that's what we're anticipating. Okay. All right. So basically, take that off. Take that off. There's an indicator that I want you guys to put on your charts, which is this indicator right here called uptick supply and demand zone with RSI and MAC by uptick. Okay, this is a really good indicator. So you go here and you just look for, type in uptick, uptick. Okay, which is right there, uptick, ICK. This one right here. Okay, I came across this indicator and it's a really good indicator. So we're going to put that on our charts. Because what if I told you that these arrows will tell you when to enter the market? Okay. Green means you buy the market. Red means you sell the market. Okay. So whenever you see these pop onto the chart, anticipate entering the market, right? So as you can see here, it puts the supply and demand zones on here as well. And so you're going to be trading within these zones. You're going to be patient enough to, either trade it within these zones. Now, like I said, you'll be waiting for sell, right? You're looking for red arrows pointing down. Okay. So you want to wait for it to come back up in the zone here. Wait for these arrows to turn red on top of the zone, and then you go ahead and place an order for it to go down. Okay, as a sell order. So this is a good indicator that tells you exactly what's going on. So you always want to trade within these zones. You want to be patient enough to trade within those zones, supply and demand zones. Okay. All right. So we'll put a box here. All right. We're going to put a box here, just reminders of the zone. Okay. So that's zone number 1. And this is zone number 2. All right. So if we ever decide to hide the indicator, we want to trade within these zones. Okay. All right. Swallow. Yeah. All right, so we're going to be patient enough for it to wait for the market to come in this area and then place our order to come down. Okay. Now, if it breaks this area, you're not going to put an order in at all. Okay. All right, because now it's changing and it's going up. But if it bounces off the zone and give you the same exact candle you see here, which is a bearish engulfing candle, that's when you would place your sell order. So you're looking for the same exact thing happening here, which is a bearish engulfing candle. It hits this area and gives you this exact candle that you see on the left. That's where you enter. You'll enter in at the next candle. Okay. All right. So now to enter the market, we're not going to enter it up on the 4 hour. We're going to enter it on the 5 minute. Okay. That way we can get a better opportunity to get into the market because the rule of thumb is to, buy low, sell high. Okay. So as you can see, it's bouncing off the lower zone right here. Right. So we wait for it to climb upwards. All right. Because what is it doing? It's actually making higher highs. See, it's a pattern here. This high is higher than this high. This low is lower than this high. This high is higher than this high. So you're looking for a pattern here. Okay, and this pattern is developing to higher highs. And as you can see, consolidated in this area. Okay, made a low, made a high, made a lower low, right? Because it's lower than all these lows here. What did it do? Made another higher high, made a higher low. This low is higher than this low. This high is higher than this high. And it's continuing to do that pattern, right? So right now it dropped all the way down here to retouch the zone. Okay. But I anticipate it to come off the zone and make a higher high. Okay. Because we want it to go and continue its pattern to go higher over here. Because once it finishes its pattern and gets to this area, we want to look for. Okay, we want to look for. Let's draw it for us here. We want to look for a bearish engulfing candle. So it'll be a candle, a small little candle. Let me see this one. Okay, I want to do one of these numbers here. And give us a bearish engulfing candle. All right, just like you saw on the 4 hour. Yes, just like you saw on the 4 hour. We want the same exact candle to develop. This bearish engulfing candle. Right here, this area. Once we see this, if it happens over here, we enter the market. And then we set our stop loss above, okay, a couple of pips above, and we set our take profit back down here, okay. So we wanted to journey right back down to the zone, right? That's why we only trade within these two zones, supply and demand zones. Okay, so you're gonna learn how to be a supply and demand trader. Okay, you're gonna be patient, you're gonna wait for all of this to happen. Instead of getting in the middle, I'm gonna wait for the actual chart to hit the top and then come back to the bottom. Okay. Because we're in a downtrend. So we want to take trades in the downtrend. And then if you put your ratio, I can tell you what ratio this is. You enter it up here and you exit all the way down here. and your stop loss is right there, it'd be a 1 to 4.5 ratio. Okay, this is your profit zone. Once it hits this area down here, then a 1 to 4.47. That's what you got to learn how to do. Okay, patience and reading the charts and understanding the candles. Because we want the same thing that's happening here to happen. Okay. So yeah, that's what I want to teach you guys today. So definitely, I mean, some people will ask, well, why not trade going up? If you think it's going to go up, why not take trades going up? Well, we don't want to do that because we want to trade with the trend. We want to be patient enough to say, hey, if it's a downtrend, it may break this area and go lower. Okay, and that's a trade you really want to be in, right? The trade you really want to be in because it's got to cover all this area here. If it trades lower than where you entered, that's a good amount of money you could make in the market because the market will leave gaps, and we call them fair value gaps. And what it needs to do is fill those gaps. And gaps are pretty much, I'll show you what a gap looks like. It's between candles where the wicks do not meet. You see, this is a gap right here. This wick and this wick is far apart with the blue candle in the middle, created a gap. So what the market has to do, it's got to come back. It's got to come back and fill this gap before it can go higher. Okay. And there's another gap right here. There's another gap. So find gaps in the market and just place your trades between the gaps. Another gap. Okay. These are all gaps. The market has to come back and fill these gaps eventually. We don't know how long it's going to take, but eventually it has to come back and cover these gaps that it left in the market. Okay, so your homework assignment is to back test and find gaps in the market, right? Because if you back test and go left, you'll see gaps and you'll notice that the market came back and filled these gaps. It did here. Okay, if you look over here, where is the gap? Here's a gap. This candle and this candle. The wicks did not touch, they got to come back. So he came back and filled the gap and went back up. Okay, there's another gap called fair value gaps. This candle, wick, the bottom of this candle, remember it's got to be a long, strong blue candle in the middle. And then there's a candle here, and there's a gap. What does it do? It's got to come back and touch or fill the gap as it did right here. Okay. So the market has left a lot of gaps right here. There's a gap, wick to the other wick. It's got to come back and fill the gaps eventually. We don't know when. We don't know when that's going to happen. But that's a lot of gaps here that it needs to fill. Okay. So if you can anticipate these gaps, you can trade according to where the gaps are. All right, so look for gaps. Okay, now these are gaps that on uptrends, which has got to come back and fill. But there's also gaps for downtrends as well that the market has to come back and fill. And we'll talk about those downtrend gaps on the next training. But in the meantime, your homework assignment is chart and look left and find gaps. The gap is between 1, 2, 3 candles. You got to have 3 candles continuously going up, And in the middle candle, there's a strong blue candle, or whatever color you have, could be green, whatever. And then the wicks are not touching. Okay, the wicks are not touching. We delete that. You'll notice that this wick right here is not touching this wick over here, which is creating a gap, which has created a gap right there. That's a gap right there. Okay. Okay. And you'll notice that this wick and this wick did not create a gap, even though there's a strong blue candle right here. It came back and filled the gap, as you can see. So there's no gap there. You don't have to worry about this one because it filled the gap. But these two did not fill the gap, right? So that's why we put a box there and we extend it all the way to the right because eventually the market has to come back and touch that gap or fill that gap. This is that extension right there. Okay. So eventually, some point in time in the future, the market's got to come back, fill this gap, and possibly go back up, or fill the gap and possibly come back, touch the gap, and trade lower. Okay. So that's how you analyze the market. That's how you look for gaps. That's how you use that as a point of interest, so on and so forth. So hopefully that was informative. Hopefully you learned a lot from this training session and you apply it to your trading plan. And going forward, like next week, we'll talk about the gaps that are there on a downtrend. Okay, so for next week, I anticipate GBP USD to trend higher to fill this area here, to get to this area. Okay, it may take a week, it may take a day, it may take a couple of hours. We don't know, but once it comes back in this area, you want to look for the same exact candle you see here. If you see a bearish engulfing candle developing when it hits the top, that's when you enter the market. Okay, that's when you enter the market. If it doesn't happen, you do not enter the market. Let it play out on its own. All right, y'all. So with that being said, I want to thank you so much for attending the training. Thank you for watching the video. Come back next week. We'll go ahead and share some additional strategies on top of this strategy. Clear everything. Get your indicators. Mark up your charts. Do a top-down analysis, and then get with me if you got questions. With that being said, you all have a wonderful week. Thanks for watching. Bye-bye for now.